Hey, Skift listeners, hear about the latest trends in the travel industry with the Brand USA Talks Travel Podcast. Right now, listen to special live from IPW interviews featuring U.S. Travel's Jeff Freeman.
DMOs are at the heartbeat of U.S. travel.
Liz Bittner from Travel South.
A lot of key gateway markets are back.
LA Tourism's Adam Burke.
We all win when we all partner together.
Plus, Brand USA's Stacey Melman and Jackie Ennis with international travel trends and Chris Thompson's farewell finale. I'm Mark Lapidus. Join us for Brand USA Talks Travel on your favorite podcast platform.
Brand USA Talks Travel.
You're listening to the Skift Podcast. I'm Skift Senior Research Analyst Pranavi Agarwal, and today on the podcast, we feature a conversation that I had with Ankur Randev, Chief Commercial Officer of Highgate, following up on our recent onstage discussion at the Skift Future of Lodging Forum on the topic of big bets and future investments. We had such a rich conversation during our session at the Future of Lodging that we invited Ankur back to delve deeper into today's hospitality investment climate. For more in-depth analysis of the global travel industry, including research reports, analysis, and data tools, check out Skift Research at research.skift.com. Welcome everyone to the Skift Travel Podcast. Thanks for joining us. I'm delighted to speak with Ankur Randev today. He is the Chief Commercial Officer of Highgate, which is one of the largest hotel management companies in the US. Highgate has about 560 properties in its network and around 90,000 rooms under management. I actually met Ankur a few weeks ago at Skift's Future of Lodging Forum in London, where I interviewed him on stage as part of a 3-person panel where we discussed the big bets and investments in the lodging sector. And I'm really looking forward to delving deeper into Highgate's investment strategy today. So welcome, Ankur. It's great to have you.
Thank you, Pranavi. Wonderful to be here again. And again, a good opportunity to speak to you again.
Great. Yeah. So let's just get straight into it. So at the forum, we kicked it off by discussing how lending and investment activity might play out in the next 6 to 12 months. And Joe Pettigrew, who is the Chief Commercial Officer at Starwood, who joined you on stage, he said that he hadn't seen many deals. Interestingly, on the back of his comments, one of the things that you mentioned, which I thought was quite interesting, was that, yes, it's pretty uncertain out there, but that opportunities will arise as assets which reach their loan maturity, as they come up for refinancing. And because of all of those kind of factors, there will inevitably be more activity and more opportunity. So my question to you is, A, how many deals have you done in the last 6 to 12 months? And B, are you actually feeling pretty optimistic that deal flow will increase fairly soon, since you'll be able to kind of capitalize on distressed assets and the opportunities that arise from that?
Sure. So I think from a perspective of our deal making, we've been pretty prolific in the last couple of years. The last 12 months, we've closed on two big deals. One, of course, was a complex project in Portugal, which included 18 hotel, 1 development site, a couple of golf courses, a resi piece to it. And then most recently, we just closed on our acquisition of Viceroy Hotel Group. So both of these deals kind of do draw a conviction around what we think happens in the short term. We see a big disconnect, like everybody does, from a capital market perspective to what ground realities are. The ground performance on field is very robust. It's always very tough to prognosticate on the macro, but from a perspective of how we see the velocity of travelers, the average rates that continue to find support where they are. This morning, Delta's earnings around how robust they think the summer is going to be. There is a fairly strong conviction in how we see at least the macro in the short term. From a perspective of deals becoming more prolific, I mean, they will happen in a couple of buckets. What you outlined, one is definitely fund life maturity issues. There'll be liquidity issues. And so on and so forth. So we'll definitely see some distress in the coming months, especially in light of the rising interest rates and how they are kind of behaving in terms of the SOFRs. But overall, our in-house view is that we continue to evaluate where we think we can continue to add value. And that's pretty much been a fundamental of deal making. It's never about the sake of growing for the sake of growth, for instance. It's always about where we can add value. And those are the things that we'll continue to keep looking at.
Yeah, I think it's a pretty interesting time out there. On the one hand, you've got a really tough macro environment, high inflation, rising interest rates, a banking sector in turmoil. The cost of debt has gone up. But at the same time, kind of underlying hotel performance has been so robust so that valuations are actually still high. So you've got that pretty interesting disconnect. But I think I think you can stay pretty optimistic, knowing that deal flow might increase. The Fed has said that interest rates might actually moderate into kind of the second half of this year, and especially with the kind of banks out the picture as more assets come up for refinancing. I think companies like Highgate could actually be a really opportune moment for you. So that was great. I think let's kind of talk a little bit about some of the wider trends that we're seeing in travel. And, we heard a lot of positive takes from hospitality leaders at the event. And I think one interesting slide, kind of data point, which was presented by Richard Clark, who covers the lodging sector from a Wall Street perspective, who also joined you on stage as part of the panel. He showed that, we're currently in a supply-demand dreamland, as he called it, because demand is growing much faster than supply in many, many markets. And actually, supply pipelines are currently still far lower than historical averages kind of in the last 5 to 10 years. So from your perspective, are we entering a supply-demand dreamland? And in which parts of the landscape do you see the most kind of supply-demand imbalance for you to really capitalize on?
I mean, I think the industry right now is, it's unprecedented times, and in a good way, because we're seeing definitely a lot of robust demand that kind of came through COVID. A lot of folks termed it sugar high, revenge travel, so on and so forth. But it has found support. A lot of folks did kind of allude to leisure, overcompensating. Corporate will never come back to where it is. This morning, again, I was listening to the CEO of Delta. He said he's already at 85% of 2019 levels, and so on and so forth. But again, the fundamentals of accommodations have been always robust. Travel continues to be fertile from our lenses. And again, to Richard's point, I mean, the most significant trend that we've observed is on the alternate accommodation, short-term rental space. There's been a big convergence over the last several years. Of course, it was propelled by COVID, with, of course, the hybrid work situation and so on and so forth. But as, we continue to observe that this is a very interesting space, because a lot of folks who have been, hotel users are looking for, a home-like experience. And, a lot of short-term folks want hotel-type amenities. So this convergence is kind of very interesting that we continue to observe across the platform. And we are kind of invested in a vehicle called Central with an S. It's a joint venture between us, Iconic, and Bozzuto. We have about close to 10,000 units in that space now, and they're doing really well. And we continue to kind of track the performances of those. But I can tell you that's one singular trend that has been kind of supported by secular tailwinds in terms of demand and how people have adopted this new space.
Yeah, that's very interesting. At the forum, we also spoke with kind of leaders in the vacation rental industry, and they were also talking about the blending of the hotel and short-term rental industry and how that has created a new type of offering and how there's consumer demand really kind of backing that. And have you actually seen this kind of demand actualize in Highgate's kind of future investments? Are you investing more into it, or you're more focused on just the hotels? And kind of on the back of that, do you find that the blending of hotel and short-term rentals offers maybe higher margins or higher returns than just a hotel on its own or just a short-term rental on its own. So is it the blending that's really what's significant here?
So I think the blending has been it's always kind of had its own swim lane for a long time, and that was the HomeAway days that got acquired by Vrbo, and of course other platforms that were in existence. Of course, COVID has propelled this entire blending to accelerate. At an unprecedented level and quick, and nobody understood it till it happened. So our view is continue to invest in opportunities that we can unlock value for our stakeholders, our guests, and so on and so forth. So we do see a lot of blending, but we will always see how people search for these accommodations. So I think while we see these trends on the ground where people want more and more of this convergence, blending kind of accommodation between hotels and long-term stay, but we've kind of observed on how they're searching. Are they using different channels? I know Airbnb has been a verb in that space for a long time. So we see a lot of demand coming from that channel. We continue to see demand coming from Expedia and Booking.com that have kind of started listing these accommodation in their main listing. So I think the convergence is real. The lines are getting blurrier by the day, and it's now at a place where people are actually looking at what accommodation needs are best suited for them. And since they have both of those accommodations kind of given to them in terms of the search results. So we continue to invest in our hotel space equally, but again, not ignoring what the traveler is kind of looking for. So there has to be an interesting blend, and we're very prepared for it with our learnings on central space.
Hey, Skift listeners, hear about the latest trends in the travel industry with the Brand USA Talks Travel Podcast. Right now, listen to special live from IPW interviews featuring U.S. Travel's Jeff Freeman.
DMOs are at the heartbeat of U.S. travel.
Liz Bittner from Travel South.
A lot of key gateway markets are back.
LA Tourism's Adam Burke.
We all win when we all partner together.
Plus, Brand USA's Stacey Melman and Jackie Ennis with international travel trends and Chris Thompson's farewell finale. I'm Mark Lapidus. Join us for Brand USA Talks Travel on your favorite podcast platform.
Brand USA Talks Travel.
Great. Let's kind of move on to a key trend aside from the short-term rental boom. And it's been one of the mega trends that we've been talking a lot about at Skift, which has been around the luxury segment and the huge amount of investor interest it has really garnered in the last couple of years. And since Highgate got a new CEO in late 2021, it seems that Highgate has been more interested in acquiring luxury lifestyle properties. And it seems that the Viceroy portfolio acquisition verifies that. And I know you mentioned it earlier. Can you tell us a little bit more about Viceroy and your investment into the luxury space?
Sure. So when we look at Viceroy, what we see is that it has an incredible brand recognition in the B2C space. We see it equally very robust in the B2B lifestyle space. People recognize it. It's a very, very, known brand out there. And again, a brand which has some iconic assets, which has that reputation anchored around. We are trying to see the value proposition that we can continue to bring to the wider, space from a scalability perspective. But with the teams that we've kind of acquired from the Viceroy, group, it's a set of very incredible, committed individuals who build this great brand. Where we see there's a lot of value is from a wider platform. Is we have a lot of in-house capabilities on design, branding, adjacencies when purchasing, revenue management, sales. So we want to definitely lend a lot of that from the wider platform into Viceroy, but let Viceroy continue to do what they've done so well on the branding space. So that was the thesis for our interest in Viceroy, and we kind of closed the acquisition a couple of days ago. The teams have integrated really well, and now we're kind of concluding our thesis on how we grow this platform. So that was definitely one of the reasons that we've had a very strong CEO who's had a very, very robust career, especially on the lifestyle space, join us. And again, from a perspective of luxury, as you know, luxury is a very different space. It's not something that we look at as a scalable proposition. The valuations for those assets continue to trade at trophy values and so on and so forth. But again, we have an iconic hotel in Boston called the Newberry, which does exceptionally well. We've had a lot of in-house learning while we kind of created that project, right from our principals, founders to every associate that was part of that project. There was enormous learning, and we've understood that lifestyle luxury is a very different space. It's highly personable. It's highly customer facing, as opposed to what you're trying to solve for, what you're offering, and so on and so forth. And once you deliver that experience, we have observed that people love to come back and love to experience that. And again, it's a word of mouth experience. So we're very happy with what we have concluded so far, or accomplished so far. But again, we are on the first base here, and again, we have a lot of work to do.
Yeah, I think it's interesting you talked about the trophy valuations that come with luxury hotels. And I think luxury is a very interesting segment because, yes, it offers much higher fee streams, much higher revenues than hotels further down the chain scale, but it also has much higher costs, which means that luxury hotels generally tend to be lower margin and offer lower ROI than kind of mainstream equivalents. So kind of what's the appeal of luxury hotels if margins and returns are lower than mainstream hotels? And I mean, I should caveat this by saying that, correct me if I'm wrong, but I do believe that prior to Viceroy, about 10 to 15% of your portfolio was only 10 to 15% was in luxury and lifestyle. So before that, you were in the higher margin kind of mainstream mid-scale. So what is it about luxury that's really got you investing so heavily into it?
Right. So again, when you kind of look at, say, a Newberry, it used to be a underperforming 4-star hotel in a very good location. When we looked at that opportunity, we had a lot of conviction on what we can create here in terms of reimagination for that asset and for that location, and we created Newberry. So while there could be some different operating plans for luxury, but I think that kind of does attest our thesis on the opportunity that we can unlock in terms of complex projects. And I think the appeal for luxury is that we are a wide player, and in the accommodation industry, we have a full service element, we have select service element, and we have lifestyle and luxury element. We have resorts element. So from a real estate standpoint, we play in all platforms. So the appeal is continue to kind of unlock the projects where we can add a lot of value, not just for just the immediate stakeholders, but also what we do for the communities in terms of what we have reimagined at the Boston project. Now it's probably one of the best hotels in Boston. So we continue to kind of look for such opportunities where it becomes a project that is not just centered around the margin play, but also it becomes a very special place for everyone to kind of experience.
Yeah, another thing. Yeah, I think another thing I found pretty interesting about the Viceroy acquisition, not only that it's in luxury, which is something that you're kind of investing newly into, is that it's also Highgate's first acquisition of a full consumer brand, whereas previously your portfolio kind of mainly consisted of single hotels, which you acquired. So has your investment strategy shifted towards buying bigger portfolios? I think you touched a little bit on this already, talking about kind of complex portfolios. It's something that we've seen the bigger hotel chains do as well, buying a large portfolio of hotels and then soft branding them under a Marriott or an IHG. Can you talk a little bit about this new branded strategy? Why have you gone for a brand versus a single luxury hotel?
Right. So there was no pre-Viceroy. There was no there was no like strategy that we didn't want to kind of create or build or buy brands. we're opportunistic. I think Viceroy was the right fit for us. We believed in the project from the minute we saw it. We looked at the team. We looked at the B2C brand recognition that it has, and we found it to be very powerful. So I think those were a couple of things among many that we looked at when we kind of concluded that this is the route we want to take. Now, pre-Viceroy, we've created a lot of special projects, but they were individual brands. We created the Quinn back in the days. We had the Knickerbocker, of course, Newberry is the crown jewel, and so on and so forth. But the point here is that Viceroy is a vehicle that we think we can grow because, we found it to be incredible recognition, brand recognition that it has developed over the last decade and a half. So that was part of the play with Viceroy. But again, when you kind of look at investment strategy per se, we continue to look at everything. Europe is our new foray. We've kind of been in Europe for a couple of decades. We've, operated in Europe really well. We've exited very well on 2 occasions, and now we are re-entered Portugal, which we found to have incredible demand-supply fundamentals. It's not easy to build there. It's not easy to get into a addressable manner because of the deep moat it has in terms of supply demand. And now we've kind of observed that it has quickly become one of the strongest leisure destinations within Europe's, and internationally now for Americans and others. So those are the things that we look at when we kind of look at our investment strategies. We are an investor in technology as well. We've invested in 15 companies that are around travel. Our thesis there has always been that we want to go deep versus wide. We want it to be complementary to our core business, and we are agnostic at what stage we invest in, as long as it creates a lot of value for our core business. So I think these are the fundamentals of our investment. And again, we stay true to them, and we continue to look for those opportunities.
I think I definitely want to discuss Europe and the I think about $1 billion worth of real estate you've done in Portugal. But before we kind of get onto that, I think I want to discuss a little bit about Highgate as a brand, whilst we're still kind of talking about that. And I think the CEO of Highgate, he has talked about marketing Highgate itself as a brand. And I think this is pretty unheard of from management companies. Most consumers don't know who owns or manages a hotel when they're staying at it. And I mean, I'm a little bit dubious, if I'm honest. Will a consumer really click on a hotel because of the brand name of its management company, rather than kind of checking reviews on Google and wanting to tap into a loyalty program? In your opinion, is this something that will kind of really work out, materialize? What's the end goal here?
I think we'll continue to flush all avenues out as they come across, and I think Raj that time may have wanting to allude to what we were trying to do with Viceroy, but of course we couldn't really talk much about that transaction till it happened. But I think from a B2C perspective, which you spoke about earlier, we want to definitely create these investments which brings Highgate into the forefront. So I think we are not at a stage yet where we are where you go to Highgate and you click and, to your point, book a hotel yet. But those are things that we continue to discuss. Now, whether that happens via the umbrella brand or whether that happens between several other sub-brands, that is something that we continue to kind of discuss, and it'll evolve itself. So I think that's period. That's what it was.
So at some point, I could go on Highgate.com and book the Newberry directly on Highgate. Is that what you're saying?
I mean, we haven't really flushed it out completely, but we are in the process of looking at if we want to go that route, or we want to continue to kind of keep Highgate as an umbrella and create new different sub-brands. So we haven't really concluded on that just yet.
Okay, it's very interesting, very new. It's something I'll definitely want to touch base on later, because it's very unheard of. So very innovative, I think. Let's talk a little bit about Europe. And as I mentioned, I think you've done about $1 billion of real estate in Portugal. At the moment, you are mainly a US focused company, but you're expanding into Europe. Why have you chosen Europe over other rapidly growing regions such as Asia or Middle East?
So first things first, we've actually been in Europe on two occasions. So the last 2 decades, we've operated in Europe. So we understand Europe completely. We've operated in over 10 countries in Europe pre-COVID. We understand, the fundamentals of supply demand within European, top 25 markets, and we love Europe. I think Europe is unique, and when we looked at Portugal, like I was alluding to earlier, it has a very unique and strong supply-demand fundamental. There's a deep moat around, and great barriers to entry in an addressable manner in terms of how you can build or acquire hotels. So, and again, with the demand fundamentals of, it becoming such a strong leisure destination across Europe and broadly Americans, and, soon to be globally with China opening and wider Asia opening, and the connectivity on travel and so on and so forth, we feel that there is a huge opportunity here. I think there's a huge disconnect to what it commands in terms of pricing to other southern European countries like Spain and France. And when you kind of look at the talent pool here, they're incredibly talented individuals here, very entrepreneurial in their approach. I mean, so all of these factors pretty much culminated our conviction on how we could add value here. With this beachfront, we're probably one of the largest operators in Portugal today, with over 18 hotels. And then we continue to operate hotels in London. One we own with a capital partner, and one we manage for. So we have 2 hotels in London, but we continue to kind of look at deals in Europe because we have huge convictions on how we can add value here.
Let's talk a little bit about the barriers to entry, particularly for Europe, because European Central Bank has recently published research on the contagion risks that might arise from real estate investment funds kind of increasingly making up a larger share of the total commercial real estate market. And I think it's about 40% in the euro area. So it's pretty significant. And I think the risk is, or what the ECB thinks is, if these funds, if there's instability in those funds, that would materially impact the total commercial real estate market. And that's a market that already has pretty deteriorating kind of outlooks already. And, that could see more regulations being placed on real estate investment funds in Europe kind of in the future. Is this something that concerns you and Highgate in general?
I mean, it's, again, we don't prognosticate a lot on the macro, but of course, if things do turn around, we'll be equally informed and we'll act accordingly with our stakeholders, partners. But for now, we view the opportunities that we've just got into about 3 months ago in Portugal and, recently in a second hotel in London to be quite unique. And, we are very happy with how they are kind of coming out of the gate. And we just focused on the ground fundamentals right now. And we continue to kind of get our teams to focus on the middle of the P&L, kind of focus on the energy, labor, and all those aspects that are kind of more concerning from an operations standpoint. But yeah, to your point, I mean, if things change, we'll be ready to act accordingly.
Okay, very clear. And so we talked a bit about luxury, we talked about Europe. So is your investment in Portugal, is that mainly in luxury and lifestyle? And I think on stage, you've talked a lot about kind of wanting to invest in complex investments, hotels and branded residences as a joint investment, which I think does naturally skew towards luxury. So is that what makes up most of the investment in Portugal, or is it a mixture of luxury, branded residences, and also mid-scale, or is it mainly kind of?
No, absolutely. So again, we like complex assets because that's where we think that our in-house capabilities are most impactful, be it like, back office efficiencies, procurement, revenue management, sales, construction, branding, so on and so forth. But again, looking at Portugal, we are looking at a phenomenal, a piece of real estate that we acquired across, beachfront, resi, golf courses, and so on and so forth. We have some extensive capital plans for this particular piece of investment, and we are kind of flushing out whether that skews towards more branded, luxury, lifestyle, and so on and so forth. But these are all things that we kind of look at. But our front and center focus has always been the right play for the real estate. So, because we believe that once you have that set the right way, then you're managing expectations for the real estate the right way. And again, that's how we start. So what is the right thing for each piece of real estate, be it a branded hotel, be it a lifestyle hotel, be it a luxury hotel, be it a independent as-is hotel. So those are things that we continue to look at by asset, and we continue to kind of make determinations around that based on what I just outlined.
Great. So I think we're coming up to the end of our time here. So let me just sum up what we've discussed today. So we've talked about the current macroeconomic dynamics and why investors can hope to stay optimistic in the face of a weak financing environment due to opportunities that might, rise from assets that come up for refinancing, as well as the supply growth opportunities that arise from demand growing faster than supply. We've also discussed in depth the investments taking place in the luxury segment, such as Highgate's recent acquisition of the Viceroy Hotel portfolio, as well as the new opportunities that have risen in the blending of the hotel and short-term rental industries. So thank you, Ankur, for sharing your insights. I really very much enjoyed speaking with you.
Thank you, Pranavi. Likewise, it was a pleasure. Thank you again.
Great. And I'd like to thank everyone who's listening. Thank you for tuning in to today's edition of the Skift Podcast. Hope you found it interesting and informative.
This has been the Skift Podcast. Thank you for listening.